Welcome to my usual weekly review. Looking back at the previous week, I hope you read my YouTube and Facebook post where I did a detailed review of the week gone by, but I'll still touch upon the highlights. Well, the week formed a turning point for the Indian markets. Why do I say that? Well, first of all, you saw that this was a week where everything was in the green, all the sectors except for, I think, the defense sector, which was marginally flat, and the PSA index. But more importantly, the large caps outperformed the broader market this week, with Nifty up almost 2.6%, whereas the micro cap index was up only about a percent. What caused this was again a big difference was the return of the FIIs, with about 6,000 crores of buying this week. So which made for them July month itself turned out to be just about 6,000 crores of net sales, net outflows. So this helped the large caps perform better. The DIs matched the FIIs with 6,000 crores. So normally they outbuy the FIIs. This time they just matched it because they're keeping their firepower ready for the earnings season as it gets completed. The other notable factor was the two big sectors which pulled up the indices were the Nifty IT index, and the story behind that was that on the one hand there's been a AI related correction sweeping across the Nasdaq and Korean and Taiwanese markets. Second was that good reports by brokers on the overall software sector in terms of saying the correction is overdone. A lot of them pulling them up to neutral meant that not only US software companies, but it spilled over to Indian IT companies also. And so they had a very good week with more than 6% uptake for the IT index. The other index which outperformed was the auto index because across the market, most of the companies report very good top line, and despite absorbing the high crude costs, they showed good increase in EPS. So this was a pleasant surprise, and auto index was a strong performer. Apart from that, for this week, the market absorbed hawkish hold from the Fed because if you saw US 10-year yields have gone up to 4.74, but a little bit of slowdown in American GDP was visible, and the lack of a guidance from the Fed meant that the reaction for the outside markets like India was not too bad, right? So that was the week gone by. What about the coming week? Well, it's going to be a very trigger-filled week. What are the first trigger? Well, the immediate trigger for the market is, of course, Mr. Trump saying on the oil front that he's prepared to cease the operations right now in search of a peace deal. But Iran has countered that with saying that they will not open the Hormuz Strait. So they will retain control over it. So I think that will continue to play a part. Oil has just retouched 90 as I speak. The second big thing was the yen trade. Let me dwell for a minute on that. So what is this yen trade? As you know, historically for years, the yen interest rates were at zero. I'm talking about a decade or more. And people used to borrow cheap and without hedging the currency, go and invest it in US bonds, US stock market, emerging market stock market, everywhere, and make money from the difference in interest rates and hope that the currency will remain stable, which it was for many years. Of late, what has happened is that the zero interest rate regime has gone away. Even a year ago, it was at 1.5%. But even at 1.5%, the US interest rates have been above 4%. So there's already a 2.5% carry. So which was the yen carry trade had come down from the 0% days, but it was still a very about $4 to $5 trillion of yen carry trade is doing. But what has happened most lately is that the Japanese interest rate inflation has gone up. So interest rates have started hiking up. They've gone up to as high as 2.8%, narrowing the difference between the dollar yield and the yen yield. Second is the currency also has not been behaving stably, right? So remember, if they borrow in yen and they invest in, let's say, the US market itself, they have to repay the yen. So if in that period the currency is not stable, if the yen has strengthened, then they have to give more dollars to use more dollars to get back. If the yen is weakened, all maja, heavy, happy, right? So this, what is happening is the yen actually has been appreciating of late. It went all the way from 162, it had depreciated to, and then suddenly Japanese intervention, 4% it dropped to 147. So the yen strengthening is not good for the yen carry trade. So that caused a reaction, and this if it sustains, and so a lot of action is going on. The US is also stepping in to help support this whole process, and that will create a big liquidity crunch in the world markets if your yen interest rates are going to rise and the yen is also going to strengthen, right? So both those are negative for the yen carry trade, which is what happened most recently. So this is something which suddenly cropped up, and now suddenly everybody is worried. Who knows, a lot of the money that went into the Korean market was probably yen carry trade, and the big correction of the Korean market is naturally leading to these yen positions getting unwound and creating its own risks. So this is something that will affect in India in some way, because it's not a big thing for India, because of the total $4 trillion, about 2 to 2.5% of the total 900 billion US FII equity plus debt in India is yen carry trade, they assume. So which means that you could see about $20-25 billion of pressure, which if as long as it's spread out over a period of time, markets could absorb. But it's a key thing which suddenly has come up in the radar, and so you must watch for it in this week. What else is of importance this week? Well, RBI policy. August 5th, after the deliberation from 3rd to the 5th, the policy will come out. As of now, expectations are for a hold and a continue with the neutral position, but who knows? The progress in the monsoon and the fact that oil is now at 90 will impact the RBI's deliberations. So it's eagerly awaited on what's going to happen. I mentioned the monsoon. So now we only left with 2 more weeks in August by which the sowing season should be over. I already gave an update. If you're not, please go and see it on the monsoon. But again, this Wednesday, another update will come. And so as the sowing season completes, it's important to get a grasp. Right now, let me remind you, it's at a 95% of last year's sowing only has been able to be achieved this year. And then the earnings season is all in full swing. About 550 companies are going to report earnings this week. So a lot of things which are going to cause action in the market, and how FIS are going to behave. DIS, of course, will pick how the earnings pans out. A lot of things to watch for. So an eagerly awaited trigger happy week. Thank you.